It is 10:23. 2021 is here, and of course, with any luck, progress will be made with the pandemic. But we don't yet know what 2021 will bring on the investment front. So let's bring in our good friend, the president of Charitable LLC, Paul Schatz. And Paul, before we begin, employers did shed jobs last month for the first time since April, cutting 140,000 positions. What do you think that means for this quarter?
I don't think it means much, Tim. I think this was pretty much baked in the cake and a tiny bit unexpected. Most of the jobs were lost in the hospitality industry. What's going on during the COVID winter? We're losing, restaurants and bars are closing again. So this is not completely unexpected. I do think that you'll see much better job reports sequentially every month for the foreseeable future.
Okay, now, what's your best at? A lot of great advice in a short amount of time. Let's go through some bullet points. Paul, what do you want people to know right now to put them in good shape?
All right, so one, beginning of the new year, anyone and everyone, regardless of your income and assets, you got it. If you don't have a budget, sketch one out with a pencil and paper, make one in Excel, revisit it at least once a year. At least you'll be shocked at where your money goes day to day, week to week, month to month, quarter to quarter.
How about the emergency fund?
Right. So COVID taught us, if you didn't realize that in the financial crisis, you must have something to fall back on. And I know if you're only making, $20,000 or $50,000, it's really hard to create an emergency fund. But whether you put pennies aside a day or dollars or not, over time, you need 3 to 6 months living expenses sitting in a savings or money market in case something like COVID or a crisis happens to you.
It says review 401k contribution. Doesn't that just roll along? Why do you need to review it?
It does, because incomes change and your status changes. So if you can add more money to your 401k, let's look at it right now in the new year. Let's do that. If you're over 50, you get a catch-up provision. You can put another $6,500 in your 401k. So don't set it and forget it. Please review it.
How should people be rebalancing their investment accounts?
Stocks, although it didn't seem like it in Q1, down 30%. Stocks had a huge run last year. Bonds also did well. But typically, stocks, if you have an allocation, 50-50 stocks and bonds, when the markets move, they get out of whack. At least once a year, if not 4 times a year, rebalance whatever your allocation is, 50-50, 75-25, back to that number.
Dow's up right around 31,000. It's still up and away?
I started talking at 18,000. I said our quantitative projections call for Dow 30,000. Our new projection is Dow 33,000, then 37, then 40,000. People shouldn't run from the stock market, but please, please, please don't chase the glory story stocks of today that are going to leave you in ruins tomorrow. If you love Tesla, let it go. Wait until you have a sizable pullback. Trees do not grow to the sky. Don't get caught chasing what your neighbors told you at an online cocktail party.
Another bullet point, be careful of bonds. Why?
When rates go up, the price of your bonds go down. For 40 years, bond prices have gone up. I'm going to argue very strongly that 40 years of bond prices going up has ended. People will be shocked to find out that they can actually lose money in bonds. Don't be a knucklehead and chase bonds.
Why should they check their credit report right now?
Once a year, you got to check your credit report. A lot of times you'll find some old credit card from a Macy's or a Lord & Taylor or a business that maybe not even here anymore, but they stay open. They could hurt your credit. Make sure you know what's open in your name as well.
Create debt service plan. What's that all about?
If you're living on a credit card, if you're living on your home equity lines, don't just pay the interest off every month. I know it's hard, especially in Connecticut. Our economy's not good. But please put together some kind of plan to pay some money towards principal.
It says review credit card rates. Is that because we're expecting a change?
Well, no, it's only because people often take those deals where you get free, no interest for the first year, 18 months, then you get socked with it.
Yeah.
So many credit cards are offering 0%. Use them. Don't get stuck paying 18, 20, 25%.
Yeah, they're hoping you'll forget those changes.
Exactly.
Bundling insurance and charitable contributions. How about those?
So bundling insurance, don't have your property and casualty at one place, your life another place, your umbrella somewhere else. Try to bundle it together with one company because likely you can get a pretty decent discount giving it all one piece of business. Bundling charitable contributions. This is from the Trump tax cuts, which in Connecticut hurt us. It's much better if you give a lot of money to charity in every other year or every third year than spreading it out equally, because then you can itemize and get a bigger tax break or a better tax break.
Review your beneficiaries. Now's a good time.
Yeah, your son or daughter got married. They're now divorced, and you've got the former son-in-law, daughter-in-law as a beneficiary on your IRA, your 401k, in your will. You had a family relative, you had a falling out. Why do you want to give them your money when you die? Check your beneficiaries once a year.
We might be able to get through all of these. Here's the last few. Refinance your mortgage. I feel like it's been a good time to do that for a long time.
I say this every year because I keep saying, who could believe they were 18% interest rates on mortgages, in the early 1980s? Mortgage rates are at all-time lows. It's insane. Maybe you can't refi because of your debt, but please call a mortgage broker and look to refi. You're going to save money, and if nothing else, you can perhaps shrink your maturity down from 30 to 20 to 15.
Photograph and inventory contents of your home. All right, you've piqued my interest.
This is always my favorite one that people ignore. Disasters happen. We have fires, we have hurricanes, earthquakes. Take our digital camera.
Yeah.
Photograph what's inside your house. Make a little inventory so that if, God forbid, something happens to your property, when the insurance company pushes back and says, no, you didn't have 11 couches and 45 bottles of wine and all that silver, you have proof of it on your phone.
Yeah, I like that. Inventorying is good, but it sounds daunting. The photographs make it a lot more simple. Last two things real quick. Update your will and either do it yourself or hire a professional advisor. What's up with
Too many people did a will 10, 15, 20, 30, 40 years ago. Things changed. Laws changed. Don't leave it to your beneficiaries to get stuck. James Gandolfini, Tony Soprano died, didn't have a will. Don't be like that. And finally, decide if you are okay on your own, managing your own money, terrific. Have a plan. People don't plan to fail, they fail to plan. If you want to hire an advisor, shameless plug for people in my business, interview 2 or 3 advisors, ask the right questions. Don't just hire someone because your neighbor said to.
There's a lot of information density whenever we have you on the show. We went through a lot quickly, but we're also going to have a video you're going to post about all of these tips that's coming up later on, yes?
Correct. I'll be doing a video this weekend to unpack these a little more and not talk so quickly.
And we will try to get it onto fox61.com in case you need to go over them again. Paul, thank you so much for joining us today. Good to see you.
See you soon, Tim.
All right, take care. All right, it's 10:31, folks.